Americans are struggling to pay their bills. The reason, of course, is inflation. People are having to borrow money to pay their bills, and they're having to borrow money on their credit cards. And I don't need to tell you that the interest on credit cards has gone up dramatically as a result of inflation.
Hey everyone, welcome back to the channel. Today we're diving deep into a topic that impacts all of us: interest rates and the rising cost of living. Senator John Kennedy recently gave a powerful speech on this issue, and it's something we all need to pay attention to, especially if you're feeling the pinch of inflation. From rising credit card debt to auto loans, there's a lot to unpack. So, let's break it down. Senator Kennedy didn't hold back when he talked about Americans struggling to pay their bills, and he's right. Whether it's groceries, rent, or gas, everything seems more expensive these days. Kennedy didn't even want to call it inflation anymore. He's calling it what it truly is: high prices made in Washington. And the worst part? It's hurting the American dream. People are being forced to borrow just to get by. Many are turning to credit cards, but that's only leading to more problems. The average credit card interest rate has shot up from 15% in 2019 to over 21% now. And that means those bills aren't just hard to pay, they're becoming nearly impossible. Think about that for a second. The highest delinquency rates on credit cards in a decade. Kennedy also pointed out how consumer debt has hit a staggering $177 trillion. That's a number that's hard to even wrap our heads around. Auto loans, mortgages, credit cards, it's all piling up. And it's not just the amount of debt, it's the cost of borrowing. For example, if you're looking to buy a car, you're now looking at an average interest rate of 8.2% on a 60-month loan, up from 5.3% in 2019. Delinquency rates on these loans are also the highest they've been in 10 years.
Americans are struggling to pay their bills. The reason, of course, is inflation. People are having to borrow money to pay their bills, and they're having to borrow money on their credit cards. And I don't need to tell you that the interest on credit cards has gone up dramatically as a result of inflation. And the interest on the credit card is not like going to your bank where credit is tight. Because of inflation, interest rates on those credit cards has gone through the roof. Credit card interest rate in March was 21.51%. Back in 2019, it was 15%. Delinquent payments on credit cards are also through the roof. 9.1%, the highest in a decade. Credit card balances are higher too. Auto loans, the average interest rate on a 60-month new car loan was 8.2% last May. That's up from 5.3% in 2019. And delinquency rates on auto loans are the highest they've been in 10 years. If you look at consumer debt, it's now, last year it hit $17 trillion. Not million, not billion, $17 trillion. It hit that number for the last year for the first time. Inflation-adjusted debt is at its highest level since 2009. And as Federal Reserve Chair Powell and Treasury Secretary Yellen have both testified in front of the Banking Committee, and I hate to say this, unless we do something, these high prices are permanent. They are permanent.
So what can we do? First, it's about staying educated and engaged in these conversations. We need to push for real solutions, not just temporary fixes. Kennedy's message is clear. Without action, these high prices are here to stay. It's up to all of us to make sure the right steps are taken to grow our economy in a way that benefits everyone. Thanks for watching. I hope this breakdown of Senator Kennedy's speech has given you a better understanding of where we are and what's at stake. If you found this video helpful, make sure to like, subscribe, and leave a comment below with your thoughts on how we can move forward.